remotely, but we're learning new tricks, and I'm an old dog, so that's a good thing. So
Yeah.
absolutely. So yeah, it's a lot more fun when you speak to see people's faces and responses and try to get a feel for things. But so bear with me. You have to look at my ugly mug a little bit, but concentrate on the slides here, and Julia will make these available as well if you need to see some of the information on the slides. As I mentioned to her when we were setting up, this is an ever-evolving situation. Things that are sensitive, there really isn't anything sensitive on this slide, but I may say some things that might be different tomorrow. So that's the only, if you listen to this recording a week from today, things might have changed. So that's just my caution. I am with the Hoosier Heartland Indiana Small Business Development Center, which also includes Carroll County amongst 11 others. Then I'm based on campus at Purdue. We have offices at Kokomo and in West Lafayette, but we cover all 12 regions, or all 12 counties in our region, and we definitely enjoy working with our friends in Carroll County. I will give this a couple of times, but we have a good resource page on the ispdc.org website, and it's a one-pager. It's made to be really simple. The Small Business Administration has a website, and that dude is massive. I go to it all the time, and sometimes I even get confused on where to go. But there are some links as well to that website according to the programs that we're going to talk about today. And of course, you can call us at 765-454-7922. Ruthie's been really, really busy. You might go into an answering machine, but she's working really hard to return calls. But you can enter into our system through the website or through a phone call, either way. My disclaimers, my lands, I've had several of these. These disaster programs are very new and they're very fluid. And so that's why I have these disclaimers, and I will repeatedly say they have changed many times, and they have, and sometimes they've changed daily at some points, and that has caused confusion, unfortunately. Have to understand, that these things are being in an emergency status. We're essentially responding to things that were unforeseen and unprepared for, with programs that are brand new and for different purposes. So while I know there is some other relief out there, I'm going to focus on the Small Business Administration relief. If you're interested in unemployment and Department of Labor, those type of things, I am a generalist. I know a little bit about those things, but I'm trying to really specialize on the SBA programs, and then that's what I'm going to speak of today. And I will say again, these slides are for illustration and educational purposes. I generalize a lot, especially when I'm speaking to groups. When we get into questions, maybe I can dial in a little bit closer. There are a lot of rules with some of these programs, and so I'm pretty familiar with them, but I generalize to make examples. So President Trump's directive to the Small Business Administration to help small businesses through the crisis, as a result of that, we have created, the SBA has created the Economic Injury Disaster Loan, which we governmentally call the EIDL program, EIDL. We have the SBA Express Disaster Bridge Loan, which has the acronym of EBL. I just call it the bridge loan. And then we have the Paycheck Protection Program, which is the PPP, or the triple P, as I often relate to it as well. Those are the three programs we're going to talk about today. Most of the emphasis will be on two of them, because the third is starting to appear to not be a good option currently, but it might come onto the scene a little later. A lot of this changed with the CARES Act on March the 27th of 2020. So that was a week ago Friday. The EIDL Act was on board and was on board early on into the crisis. When the CARES Act was passed, I had the TV on in here in my home office. I automatically started getting emails about questions, and so really things changed heavily over that past weekend. So this slide is one that I'll just speak about a little bit, then I will go into detail on each of these loans greater. But I like this slide because it does give you an idea, and this is something that if you go back and look through the recorded program to grab this slide or see the slide set again, this will be a handy tool. It highlights the eligibility for each of these three loans, essentially the same. I doubt that there's anyone in this audience today that does not qualify. Even nonprofits now qualify for most of these loans. Even religious organizations qualify, and those are things that the SBA doesn't necessarily usually engage with. So most all of our listeners here are probably going to comply with all three of these loans. With the EIDL loan, the first column there, you apply directly to them and funds are received directly from them. Typically, the SBA does not do that, but in this case, they do. So that's an online application. With the Paycheck Protection Program, you go through an SBA 7A lender. The 7A is a popular loan that many businesses use, especially early in their stages of their business life. It's a guaranteed government loan, and those organizations, those lenders and institutions that are accustomed to doing these loans also can do this Paycheck Protection Program. The loan is modeled after that 7A loan. And then we have the SBA Express Bridge Loan that is only available through Express lenders. And there are not very many Express lenders in our region. I spoke with one this morning, and they're not doing much business with the Express loans. So I probably won't talk about them very much today, but I will expose you to this because, as again, this is an evolving situation, and that loan might come into play a little bit better down the road. Terms. The important thing about the terms here are the EIDL loan is a 30-year term loan. And it's a fixed rate of 3 3/4% for small businesses. So essentially they're saying, hey, if you qualify, you borrow money through this program, we're going to give you a long time to pay it back, which means that those payments will be digestible. Whereas the Paycheck Protection Program is a rather short-term loan for 2 years. The bridge loan may go out to 7 years. Amounts. The EIDL loan is up to $2 million. The Paycheck Protection Program, as I will illustrate a little later, goes clear up to $10 million. But it's heavily weighted on your paycheck, your payroll. And the bridge loans go up to $25,000. So I mentioned the interest rates, 3 3/4 for the EIDL loan, 1% for the PPP program. The SBA Express Bridge Loan is probably going to run you close to 7%, thereabouts. Pretty typical small business money at that point. As far as loan security, the EIDL loan is unsecured up to $25,000. And I believe actually I need to amend that. I believe it's up to $200,000 now. That's an amendment that came through not too long ago. There's none with the PPP program or the bridge loan. The payment deferral, which means your first payment will not start until after you get the loan. For the EIDL loan is a year out. So you're not going to have to pay on it until hopefully this crisis is beyond you, beyond all of us. The triple P, 6 months. Forgiveness, and this is what's got everybody's attention, and so I will dwell on this a little bit more today. The EIDL has a loan advance part that may be forgived up to $10,000, and again, I'll talk more about this heavily shortly. Much of the Triple P program may be forgiven. It's based on payroll again. So that's important to know. These loans for the EIDL loan is available clear out to the end of the year. The Triple P is only through June 30th. The bridge loan is only until the end of September. There are some prohibitions on what you cannot pay, use the funds for to pay. For the EIDL loan, it's existing debt. The important thing about the PPP is you can't use the same funds for an opportunity for borrowing. And I'll talk about that. I call it double dipping. But you can do multiple EIDL loans, only one PPP loan. So the application part's a big part of it. Down there at the bottom is the link for the SBA link. That's a totally online experience. Whereas with the Paycheck Protection Program, you have to go through your participating lender, which I encourage that to be your local lender. And then it has to be an express bridge loan lender for the SBA express bridge loan. So now I'll go into a little more detail, and some of this will be repetitive, so I'm not going to do this quite the same way I've done it prior, but so who qualifies? I mentioned again, you're all going to qualify. Talked about the terms. The forgivable advance is something that's new. It was not there until after the CARES Act. So this is an important thing to remember. If you applied for the EIDL loan, and I believe the CARES Act, oh, I don't have my cheat sheet up here. Let's see. Let me grab it on my other screen really quickly here to give you an exact date. Here we go. Sorry for that. Yeah, so if you applied for the EIDL loan prior to Monday, March the 30th, then you need to go in and reapply if you want the forgivable advance aspect. Before March 30th, the EIDL loan was a typical traditional loan with all funds to be paid back. As a result of the CARES Act, that changed. There is a forgivable aspect, and it's an advance. So to give a brief example, if I have a business that has been challenged and injured because of the disaster loan, because of this disaster, excuse me, then I might apply for this loan. I might have found damages to me, maybe at $25,000 because I'm paying my payroll, I'm paying my rent, and I'm paying my utilities, I'm paying my suppliers, yet I'm not receiving income. And so I'm trying to borrow money on expenses that I haven't received income back to pay for. That's how this loan works. Now, when I apply for that, within a few days, the SBA says, and I still say give them some weeks, of a properly applied for EIDL loan, they're going to advance up to, and it's not a guaranteed $10,000, but it's up to $10,000. That will ultimately, if all terms are met, you will have that $10,000 advance forgiven. So it's essentially money without cost. It's still a loan. It's still an application process as a loan, but it may be forgiven. And so that gets people kind of excited when we talk about forgivable loans. So you apply online. So I'm going to show a few screenshots. A couple of these may not be perfectly because I've not got screenshots of the new modified application yet. But here's some of the information to submit for the EIDL. And again, I think it's really important to understand two things here, and this is how I've walked people before, as the EIDL loan is, you notice it's a disaster loan, and it's set up in the same model as if we had a tornado or a flood in Indiana, or we see on the Weather Channel a hurricane on a coastal area that's devastated an area. This is the type of relief that small businesses get during those disasters. And when you apply, some of the forms and some of the formats and some of the language will make you think, oh, I didn't get hit by a hurricane, but yet it's set up on that same model. So that's why some of this language looks similar, because they modeled this entire program based on their disaster relief program, and that's why it's called the economic injury disaster relief in this process. So some of the things you're going to need is your last business tax return. If you've not filed for 2019, then 2018 still works. Basically a balance sheet of your business, and probably personal as well, your last personal tax return, and those for any owners that have at least 20% ownership of the business. So some sales history, and then you're going to follow the process. Just think of it as if you're applying for any loan, or a house mortgage, or a business loan. You're going to have to provide some personal information, some business information, and some tax returns. But it's not a large amount. It's not overbearing, and they're not asking for any more than a year. So that makes it quite a bit simpler than what it might be otherwise. And so this is what that disaster loan assistance screen kind of may look like. And I do believe this screen is exactly the same right now. And then you go to apply online and hit that double click right there, that blue box in the middle, and that gets you started in a very online process. You may see something like this where you'll need to say that, hey, I'm a business that's applying for a disaster loan. And again, as I mentioned earlier, this is where you see some language for other things like the homeowners and renters thing, which is you're not applying for. Make sure you're applying for the business, and if you're a nonprofit, that as well as disaster loan. There, in the early process of this program, the one bit of confusion that we often ran into with clients was that was this Form 5 app. If you're in business, and you're an LLC or an S corporation or even a C corporation, you fill out and complete Form 5. If you're a sole proprietor and you're not organized as a business entity, as an LLC or an S corp or a C corp, then you're going to complete Form 5C. That caused some confusion with some folks, so I threw this slide up to help you understand that. And then this is a little bit about where you will complete and say, hey, my wife is a 20% owner, my son is a 20% owner, my best owner, my business manager maybe is a 30% owner. Anyone that has ownership of 20% or more of the business, you have to complete some information, and they have to do an online signature of that information. If it's less than 20%, then it's not an issue. And I think it's really important with the idle. The idle is a backwards looking tool. And I think I'll use the example of a tornado, since we don't have hurricanes in Indiana, although some have come through. But if we had a tornado, if the tornado came through my neighborhood last night, a couple of big trees fell on my roof and made damage, then of course I would go out and check with my insurance and hopefully get paid for that damage. The idle looks the same way, except we know that this is a process that may carry on. We might have another tornado in another week or two, or many of us may feel we're in the middle of a tornado that doesn't end right now. So we can reapply. So in our first application today, we're going to look back to February as a starting point and say, hey, here's the bills that I'm paying that I don't have revenues to cover, and we need a loan. And it's important to understand that this is a loan, and you have to show ability to pay that back over time. A lot of people forget that pretty easily. So they will check your credit score. They will go through a formality to see if you're able to pay the loan back. So most all of us that are in business, that are solid people and good businessmen and women, shouldn't have a problem explaining that. But I've gotten some calls and some questions from those that were probably not in a good position, or really weren't in business very much, or not had much business activity, and you don't have any proof or evidence of that, then that could be a challenge for you. So I'm going to leave the idle there for a minute, and we're going to come back to it towards the end. I have a strategy that I think will be helpful to share with you. The disaster bridge loan, again, I'm not finding many lenders participating in this, so for now, it's just consider it to be an option that might come back onto the plate as we see how these funds are allocated over time. The Paycheck Protection Program, this is the biggie that came out after the CARES Act. This program is very much forgivable in many aspects, and so people have gotten very excited about this. So who qualifies? Again, the small businesses. The money can be used for only very particular things. This is mainly based on your payroll, and I'll throw out a slide here in a little bit for you to help estimate what the amount of the program that you can apply for. Payroll and payroll related expenses and some rent, and I think, let's see, rent and some interest might be applicable here, but it's a very limited set. The idle loan, just about anything goes with any normal business activity expense. The Paycheck Protection Program is a much more limited program as to what the money can be used for. And again, the emphasis is in the name. It's for the paycheck. This is to pay your employees. If you're self-employed, it can work as well. If you're a contractor, it can work as well. But just know that it's based on what you can prove that your payroll has been, and most folks just use their 29 tax-related activity where you prove your payroll, and that is what helps you to qualify, helps determine how much you can borrow, and how much might then be forgivable. And this is an application that you have to make through your local business lender. And it is sponsored with the Department of Treasury. And it's a very simple form. So here's what the basic governmental portion of the form looks like. This is page 1. It's basically some information. You'll see there's some applicant ownership language in there, not unlike the idle loan. And you can see there's basically a lot of legal type of questions asking, what is your position on these questions at this point? Page 2 is more certifications and signature. Page 3 and 4 are just instructions. I mean, it's a really simple form, but in reality, you'll work with your lender to prove that what your payroll is, and then they will help make sure you understand how much you can borrow. And then for the forgivable aspect of this loan, which again, most of it is forgivable if you can comply with all the rules, then you provide that evidence back, and then that forgivable portion will be removed, and then this money will come to you in a relatively free matter. But I like to emphasize that it is a loan. A lot of people are calling it grants. It is not a grant. Quite a difference. In fact, we just cringe when we see the grant word in the SBDCs, because that name, that moniker is always a question, and it always creates a lot of skepticism and criticism and excited anticipation in the public, when in reality, this is very much a loan which is forgivable if you comply with the terms of the loan. If you do not comply with the terms of the loan, you will have to pay it back. And that's the important thing to understand here. So here's my kind of cheap and easy, and I made my own here earlier today. The important thing here is for the PPP program is to take whatever your payroll was last year and divide it by 12 and get that number. And whatever that number is, you multiply that by 2.5, and bingo, in this case, is $26,500. In this very rough example, this assumed that the business had a payroll of $120,000 last year, and also paid, we had Medicare and other expenses and taxes on employees and unemployment insurance and things like that. And in this case, it's estimated to be $7,200. So we have this this total amount of $127,200. You divide that by 12, and then multiply that number by 2.5, and bingo, you've got your maximum loan amount of $26,500 in this case. So I took a long walk after I made this presentation yesterday, and I had another client. So I was thinking through this with our especially small clients. When they're mainly it's one-off, maybe it's a one-person business, or maybe it's a mom and pop business, or there's just a couple of employees. This PPP program is important to consider, and it really is not going to make much sense to apply for it unless your payroll is large enough to support a larger number on this. And the break-even spot really is about $50,000. So if we totaled up the left column on this example, and we get down to $50,000 and divide that by 12, and then multiply it by 2.5, you'd find out that puts us shortly over the $10,000 amount. Okay, so here's the big discussion for you to have with yourself, and happy to engage a little further, is if that number comes out to about $10,000 or less, there's no need to apply for the PPP program. And that's my thought. This is advice. I'm not telling you what to do, but most likely you're better off, because you cannot double dip. You can apply for both of these programs, the EIDL program and the PPP, but you can't use the same expenses for both of the loans. And that's the caveat here. You cannot double dip. So in this case, the forgivable loan aspect of the EIDL loan, if it goes up to $10,000, and if you put your payroll on that and get it up to $10,000 and you receive that, then you're in just as good a position as in if you did the PPP loan and went through that process. There's really no really great reason to do them both, especially then if that amount comes less than $10,000. That's kind of the magic separation spot, is to be able to have 10,000 or more. Certainly, man, if that number's 26,000, like this example, or 30 or 40 or $50,000 for the maximum loan amount, clear up to $10 million, then by all means, you need to participate in the PPP program. But if you're just thinking, how do I take advantage of the forgiveness aspects of these two loans, then the EIDL loan for less than $10,000 is probably the most simple and straightforward loan to apply for. And not to double dip, because you can't do it. So there's no need to ask for the PPP loan if it's less than $10,000 for a maximum loan amount. And that's kind of the discovery I had during my walk thinking this thing through yesterday. Prior to this, I've encouraged most everyone to apply for the EIDL loan because it has a much greater expanse of expenses that you can pay with it, whereas the PPP is very much emphasizing the payroll amount. So these are the allowable uses of the PPP funds: payroll cost, healthcare benefits, interest on mortgages, not the principal, rent, utilities, interest on other operating debt obligations, and within the covered, or before the covered period, which begins February 15th. These expenses have to be made for and paid for between February 15th and June 30th. So in essence, if we use the example that we had on the prior page of $26,500 and we apply for the PPP, if we pay our payroll as planned, and if we include our other expenses as this, then essentially all of those will be paid off or forgiven in the loan, as long as we meet those payroll projections that we applied for. If we do not make those projections, let's say we had 5 employees and we had to lay one off, So that's a 20% reduction. So in general, you would have to pay 20% of the loan back. There are some other rules that involve with this. This is a little more complicated. There's several formulas. I've got a law firm's analysis of this that I look at once in a while to make sure I understand it. You know, I'm not a lawyer. I'm not a CPA. I'm a business advisor. And what we're trying to do here is to give you some direction to think through this process to try to clear the air, because there are so many options and so many questions and so much confusion as these programs have changed and people mix up the programs. So in this process, you know, again, the $50,000 worth of payroll, which may include your own portion of that payroll, by the way, if it's $50,000 or more, then it begins to look much better of an idea to apply for the PPP, and perhaps not the EIDL, depending on how close you are to that line. But anything less than $50,000 worth of payroll, and especially as you have more other common expenses that are even wider scope of what the PPP list is here in front of you, then you probably should go to the EIDL loan. So I guess I got ahead of myself with my slide, but here's a little bit. So the EIDL seems to be fast cash or in advance. You might get this a little bit quicker. I'm not sure now, but we'll just have to see the timing on this. I was mentioning to Julia, a lot of lenders with the PPP, some are doing it. Some are applying, some are getting the money, but not a lot. Other lenders may be 2 or 3 weeks out before they get their program up and running, so it could be a while. The EIDL, I'm still not sure that they're getting a lot of money pushed out, but the fast cash advance of up to $10,000 and that same amount being forgiven is very attractive. And again, you can reapply for the EIDL over time as you look back. With the PPP, you look back and forward out to June 30th and try to project what your expenses are over that period of time and request that as a loan. But you can apply for both, but you cannot double dip. So again, if you're especially thinking about your payroll as an example, you can't use that same payroll amount on the EIDL loan as what you do for the PPP. You have to throw it into one category or the other. It's my understanding that you can use EIDL funds to pay off the PPP if the PPP indeed is a loan that you have to pay back. So there are lots of little details into all that, and I'm not going to get really carried away here because I'm afraid that the more details I provide, the more confusing I might make this process. So that is my $10,000 loan forgiveness rule, and it very much depends on how much money you need, what your payroll amount is, and then that helps you understand the difference between the EIDL loan versus the PPP program. So, I would strongly consider you to take last year's payroll from your tax records, divide that by 12 to get the monthly average amount, and then multiply the monthly average amount by 2.5, and that will give you what the amount of PPP that you can borrow. And then at that point, if it's $10,000 or less, it may not be worth applying for the PPP loan if you apply for the EIDL loan. As it gets greater and greater above $10,000, then certainly the PPP is the place to be. And if you need additional funding for other things that are broader than the list that I showed you for the PPP, then you can also apply for the EIDL loan for other things. And we're doing pretty well on our time, so I'll throw out a few other things and then we'll get into questions here. So this is really important. Beware of scammers. This happens all the time. It happens in every emergency. It happens whenever the government is providing funding. So even if you Google PPP loans right now, you're going to see other aggressive businesses that are going to try to help you apply for a fee. There's no fees with this application. You should do it yourself. You don't need to turn over your Social Security and business employer identifications numbers to anybody else. But there are scammers out there. I actually got an email advanced to me through our SBA deputy director that said, hey, the FBI has already seen instances of this. And this was over, I think, 2 weeks ago now when I got that first example of that there being a real issue out there. Another thing is to go up and down your own supply chain and check out industry leaders and strategize, where's your business going to be in the next 6, 12, 18 months. I think that's really important. We don't know exactly when this will end, but we have to consider where the position our business is going to be in those 6, 12, and 18 months. And that might help you decide if you want to apply for these loans or other actions you might want to take. And these are hard times, and it's not fun. It's not fun for anybody. But you can talk it over with one of our advisors if you like. Again, we have a staff of 4, 3 of us advise, and our admin is constantly on the phone setting up reservations. Our services are free. We do this over the phone now, and you can feel comfortable speaking in confidence with one of our advisors because that is what we are bound to. And it's someone that you might be able to relate and explain and talk through for that can understand and that can appreciate the position you're in. We've all had entrepreneurial experience of one sort, and so we understand what some of these difficult times can mean for us and our families and our businesses. And then our isbdc.org webpage, for those of you that can't see the screen, it's ISBDC. That's for Indiana Small Business Development Center.org. We have a good one-pager with lots of links, and a lot of this information I'm providing today is also available at that website. So that brings us into question time, Julia.
Okay. Let's see. Can you hear me okay, Monty?
I can.
Okay. So we have had one question pop up that asked, what if you applied for the EIDL on March 30th? Should you go back in and do it again, or
Okay.
what's the process?
Yeah, that's a great question.
Yeah.
Probably the answer would be that during that application, if it asked if they wanted the $10,000 or up to $10,000 advance, the advance question was not on there. And also another clue would be that there was not a preliminary account with a password and username established. Now it's more of a direct application. So
Okay.
the big thing were you given the opportunity to request the advance money?
Okay.
And if you want the advance money, then you do have to go back and reapply through that process. They haven't forgotten your old one. If you do nothing, you'll still be in the application process, is my understanding, but you can't get the advance. And that, of course, that's the forgivable part, which is very attractive.
Sure. Also a question, what if you haven't been in business for a year yet? What if you've only been in business less than a year? Do you qualify for anything?
Okay. Yes, you should. That's where you're probably going to have to work a little bit harder to prove. But if you were opening at least a few months prior to February, you should be able to prove that out and essentially just do a P&L statement for those months that you were active. So you can say, hey, this has been this was my normal before the abnormal crisis began. So you can, and there are, again, I told you I wouldn't get into the minutia of all the rules, but there are some ways to tackle that you can prove that you were in business. Payroll might be harder, but again, if you had a few employees and you had a retail shop or a restaurant or something like that, and you were tooling along for a few months, you should be armed with enough information to prove that A, you were in business, and B, that you were injured from this crisis.
Okay. And another question I've had, for when applying for the EIDL loan, obviously going online through the SBDC, do you have to do your entire application start to finish, or can you go in, leave it, and then come back?
Awesome question. You can leave and go back, is my understanding. I know that you could in the old format, and I'm pretty sure you still can in the new format. People have been leaving and coming back, so
okay,
yeah, should be good.
Okay. And then you also said self-employed folks can apply. So they can apply for both PPP and EIDL
They
potentially?
can.
Okay.
Yes, yes. Most likely they can. And again, that's where, especially if there's like a one-person shop, like maybe you're a consultant or you contract with a lot of work, then that $50,000 worth of income on your payroll, that's where the magic spot really begins to get you more engaged into the PPP program versus the EIDL program. If you start to exceed that $10,000 worth of forgivable allowance that the EIDL program has. So I spoke with a client yesterday that was a contractor, and so you just have to think, how do I prove what I paid myself? And really the answer is what did you pay? I'd say this one more time. Sorry, I caught myself right in the middle of it. What did you pay yourself as income in which you had payroll related expenses, as in Social Security, Medicare, those things. That is what we call earned income.
Okay.
And so, and yes, 1099 contractors can get in on this as well, but they have to prove that that income was there. And then they also have to prove that they paid Social Security and Medicare taxes on that.
Okay. We actually had somebody comment that she went on this morning to apply for an EIDL loan and she was not able to leave and come back. So I don't know what happened, but I'm going to,
It's really busy too. I've had some people say, I'm getting up at 2 a.m. and doing this.
Yeah.
So that's part of the challenge, I think.
I'm going to unmute everybody at this point in time. So if you have a question, hopefully we'll be able to hear you if somebody wants to maybe start with a question. Anybody want to jump in?
I'm trying to figure this out 1 second.
Okay.
Okay, with me being a tattoo shop, as I've been watching the news and everything, I have not seen anything being mentioned about us tattooers. And as I got it set up, I'm a sole proprietor.
Okay.
So when we did our taxes this year, my wife and I had to do them together. Does that make her a partner? Does that make her the 20% that we were talking about? I mean, it was talked about earlier. I don't know how to explain this.
Well, as a sole proprietor, you would operate under your Social Security number. And so if you file a joint tax return, that information would be on that tax return for your wife, but it's really committed to your Social Security number. You might, and this is a good question, and I can't absolutely nail, but it's not going to hurt to go ahead and say that she's involved with the business. That will not dilute your ability to participate in the programs. It's not a hindrance to have her included. That would be a safe answer.
Well, the reason is because like on my everyday life with my bills and stuff like that, she's the one that takes care of how all of that gets managed.
Sure.
Even though the money that we get for the shop goes right now, I opened up in August, was it?
Okay.
So the way that I can show revenue and I can show everything because I've done everything the way I was supposed to.
Mm-hmm.
But I don't know, because she's my business partner, but we do everything 100%. You get me?
Yes. Now you should be safe because you do have that historical information, and so I would just prorate that out. It's like, hey, I was in business from August through December, January. Here's what my monthly earnings were prior, and of course now here's where I am because of the result of the crisis, and then you can ask for a loan, and in essence for some of the difference. And again, it's expenses that you paid. So in your case, the cost of your building would be a big thing, whether it's rent or
like the stuff. We got the normal rent, insurance, all that stuff that right now is coming out of her pocket because I'm running really low on extra cash. But
sure.
one of those things. I just didn't know of that part. It was, do I put her in as a partner or, but I get it now. I get it. Thank you.
Yeah, very good. Good question.
How about other questions? And if you're not able to talk, then there's also the chat screen at the bottom. If you want to type a question, I can see that and relay that. Has anybody applied that maybe has some advice that you want to share?
Mm-hmm.
Okay.
Yeah, I agree. Any experiences that people want to share with us, it just helps the next person along. I really appreciate that because it's also new.
Yeah.
It's also very new, and so I know what I know.
Yeah.
I don't know everything I'd like to know. I can tell you, I can assure you that.
Yeah. Oh, we see you, Amanda. How about you?
I have just applied for 2 of our businesses for the PPP within one of our banks. And I was a little worried at first because we applied on Saturday and they kept telling us over and over, you're going to get, your second email. And we never got it until late last night. It was a very slow process when we were able to finally get in there and get the information. But what they kept telling us to be prepared for and what we needed to do for our 941s or whatever forms it was not what they asked for. So I had to then hustle through and get, what they did ask for. But they were asking for the articles of origination for your businesses. They were asking for, if it was a corporation, your bylaws, obviously your social security numbers and all that kind of stuff. The only other thing they asked for was how we were getting our payroll, whether you were using your 941s or, payroll summary or whatever. It was pretty easy to do. But the other thing that I found out this morning, I thought I was all done. But then if you have another partner, so my husband owns 50%, I own 50%. They sent him an email also that had to then click on, okay, you're not a criminal and all those checklists, and making sure that I had updated the correct driver's license for him and that his social security was correct and all that. So that was a new thing that I was not aware of. I thought, I'm applying for all this stuff. Yes, he's a partner, but every partner will receive an email that they have to fill out. And that was new for us because we had no idea. So you guys need to be on the lookout. If you have more than one partner and they're over 20%, every one of them will receive an email that they have to fill out the second part.
Good to know.
So.
Yeah, thanks for sharing that. That was good information. And I might add, because even though the PPP program it's standardized within the government, each bank may have a little bit different process the way that they're going to deal with it, and that's what makes it unique. We might go to another bank downtown, and they might be a little bit different than what you experience, but they're going to still have those laws like the greater than 20% ownership sign off. Because it is a government loan, and that's why I keep iterating that it's a loan, you'll have to pay it back, etc. And especially if you can't meet up with the qualifications, and it doesn't make you bad if you can, it just means you have to pay it back.
Yeah.
Now, when I was applying for the second part, phase 2 is what they're calling it. They say there's 3 phases in this process with our bank. Okay. Phase 2. Down at the bottom, when I was filling out all the information, it says when submitted that we would receive the final approval by 4/17. So it seems like it's maybe going to go pretty quickly.
Wow, that's good.
I thought that was pretty great.
Yeah, I appreciate that because it's really hard to know. It just is, because the idle's been out there for a while, and I'm not really sure that there's a lot of those funds have been dispersed yet. I know there's been some applications turned down, mainly because they were incomplete or they just weren't real businesses. I mean, that's a natural reaction in some spots, but I don't suspect many folks are going to get turned down if they apply properly. The other thing about the PPP, which does make one to want to apply post haste or to decide, is there is a cap on that, and I even heard the president address that. He's on the news all the time anymore, but he said, you know, well, we'll ask for more money, but there is a cap, so it doesn't mean you'll get more money for it.
Now, the paperwork or the application that I did yesterday showed if you've already gotten the PPP once, you will not be able to receive it again.
Right. Yeah. It's a one and done program.
Okay.
Yes.
Yeah. And that's where then if you need other relief, you'll go over to the EIDL program.
Okay.
And that's one question I had maybe for you guys, and I've not had clarification. If we've applied for the PPP, can we apply for the EIDL loan?
Yes, you can, but you can't claim the same expenses.
Okay. Because
yeah,
when I was trying to apply for the PPP, the only information I could put on that was our payroll. I could not put any other expenses on there, rent or anything like that.
Yeah, that's interesting. No, and that doesn't surprise me. I mean, I've been around government all my life, and I'm all about the intent of the law. And we know sometimes lawyers will change those things over time, but in reality, the intent is, you know, for this is to get people, get employers or small businesses to keep their payroll, to keep their people on their payroll and continue to. That's the real intent, and that's why it's such a sweet offering in terms of forgiveness. And then if you think from the government's point of view, it's like, well, if we are able to maintain a lot of our small business employees, then our unemployment and other issues, other workforce related issues are mitigated in a different way than what otherwise we'd have to do. So, you know, it's a win-win for them. And that's how we win, because we're just essentially providing our employees jobs for a little longer during this process. And
have you had anybody apply for the EIDL and get anywhere besides just a loan number?
No, I have not. It doesn't mean, you know, of course, we talk to lots of people, got hundreds and thousands of clients across the state, but we don't always hear back. So, but I personally have not. There's 10 regions. I have peers, so I have 9 other peers, and we have a chat group, and we have been chatting with each other saying, hey, have you learned this or learned that yet? And like you just mentioned, we are hearing about some PPP approvals coming in.
Yeah.
I don't, approvals, yes, cash, no, no money yet. On the EIDL, honestly, it's been really quiet. And so, and again, it's a very new program in a very extreme time. And I think as soon as that motor starts, they'll start cranking it out. And, you know, as soon as we hear about the first one, we'll probably hear about many, I imagine.
Yeah.
So I know that the SBA has got jobs out, you know, all over to help process these things. And so they're gearing up. And so I imagine they'll start moving rather quick after they get up to a reasonable speed.
We have applied for we have 7 different entities. So the ones that had payroll applied for the PPP, and the ones that didn't applied for the other ones. And that's why the PPP is moving along way quicker. I applied for the EIDs clear back the end of March, and I haven't heard a word from them.
Well, the nice thing about the PPP is it's your local lenders. So, and I did find out that every bank in Carroll County, except for IFQ, is a PPP. They will be doing PPP loans. And then I heard from 4 of them actually that will do bridge loans. So Regions, Horizon, Security Federal, First Farmers, I think all of them will do those bridge loans too. So at least the good thing is you got your local folks to connect with.
That's good to hear, Julia.
Yeah.
I appreciate that. And again, I didn't speak about the bridge loans, but they might become more needed as we go here. Right now, just the forgivable aspect is what makes the others so attractive.
And then if you're on Facebook at all, there's actually a Facebook group called SBA Disaster Recovery Loans. It's a group that you can join. Looks like there's about almost 10,000 members, and people, it's all over the country, but people are asking questions and people are saying, hey, I've got this, or have you done that? So, I mean, if you're looking for a place to maybe ask others their experience, that's a good spot to go on
What
to.
was it? What was it
It's,
called again?
it's called SBA Disaster Recovery Loans. And I believe it's a public group managed by somebody at the SBA. So
Wait,
yeah, it's a good one. Any other questions? It's almost 11 o'clock. I heard a voice.
Oh, that was a miracle.
I said no.
Okay.
Hey, we want to thank you guys though, because this is like being a new business. This is all brand new to us.
Yeah.
So we're not trying to freak out because this is we've been poor all our lives, so this is nothing new. It's just the whole aspect of being so new to the town and then running into the chances of losing the business altogether.
Yeah.
It's
a scary time for everybody.
I mean, we're all going through the same thing, and I don't know what your guys' beliefs in, but God has us all in His palm of His hands, and I think we're gonna be okay as long as we stick together.
Yeah. It's important to stay positive, and please share information with me. I'll continue to share info with you as I get it. Department of Workforce Development, I was on a webinar with them yesterday. They've got some great information about unemployment. And then for self-employed, they're still working through the program. I don't know, Monty, if you've heard that, but there's a couple of things coming down the pike for self-employed folks as well. So stay tuned for that. As soon as we see something, we'll shoot it out there to everybody. So
Again, thank you.
yeah, no, thank you guys. Thanks a lot, Monty. We really appreciate
Yes.
your time. And
Sure.
again, guys, I've got his contact info if you weren't able to see that in the beginning. If you need that to reach out direct, that would be good. So I've recorded this. As soon as I can figure out how to upload it, we'll share it with our friends, and I'll share the PowerPoint too. So yeah, okay. Take care, everybody.
Thank you.
All right.
Thanks,
Thank you.
Julia. Thanks,
See ya.
Thank you.
Bye-bye.
That was helpful.